Have you heard about Circle's stock skyrocketing 465% since its IPO just weeks ago? Circle Internet Financial, the company behind the USD coin or USDC, went public on June 5, 2025, under the ticker CRCL on the New York Stock Exchange. Priced at $31 per share, the stock has exploded to over $165, delivering a jaw-dropping 465% return in just over a month. But what's fueling this rally, and can it keep climbing? We'll break down Circle's business, the market dynamics behind this surge, and the risks and opportunities for investors. This video will give you the insights you need to understand Circle's meteoric rise. Alright, let's unpack this. To understand CRCL's surge, we first need to know what Circle does. Circle Internet Financial is a Boston-based fintech company founded in 2013 by Jeremy Allaire. It's best known as the issuer of USDC, the seventh largest digital asset with a market cap of $62 billion as of June 2025. USDC is a stablecoin, a cryptocurrency pegged 1-to-1 to the US dollar, designed to maintain a stable value, unlike volatile cryptos like Bitcoin or Ethereum. Stablecoins are a game changer. They use blockchain technology to enable fast, secure, and low-cost transactions globally, without the wild price swings of other cryptocurrencies. Think of USDC as digital cash that can move seamlessly across borders, even to people without bank accounts. Circle also offers EURC, a euro-pegged stablecoin, and a suite of payment APIs and treasury services for businesses. Circle's mission is to make stablecoins a cornerstone of global finance. They want USDC and EURC to be as common as PayPal or Venmo for payments. They're partnering with financial giants like Fiserv, which powers thousands of banks worldwide, to create on and off ramps ways to convert fiat currencies like dollars or euros into stablecoins and back again. This makes USDC a go-to for cross-border payments, remittances, and even helping the underbanked access financial services. But how does Circle make money? Simple but powerful. For every USDC in circulation, Circle holds an equivalent amount in dollar reserves. They invest these reserves in low-risk assets and earn a yield, historically tied to the Secured Overnight Financing Rate, or SOFR. In 2024, Circle generated $1.68 billion in revenue and $156 million in profit, with Q1 2025 showing $579 million in revenue and $65 million in profit. That's explosive growth from $772 million in 2022. Their business model thrives as USDC adoption grows, which brings us to why CRCL stock is soaring. So, what's behind this 465% surge? Let's break it down into 4 key drivers. Driver 1, the hype around the IPO. Circle's IPO on June 5, 2025, was one of the most anticipated of the year. Priced at $31 per share, it valued Circle at $6.8 billion. But on the first trading day, shares jumped to $69 and later hit $103. By June 16th, CRCL reached $165.60, a 434% gain, and has since climbed to reflect the 465% surge we're discussing. The IPO set a record for 2025's largest first-day gain, with trading volume hitting $42.77 million on June 16th alone. Investors were buzzing with excitement, and that momentum carried the stock higher. Driver 2, stablecoin market growth. The stablecoin market is booming. In 2025, the total stablecoin market cap is around $260 billion, but analysts like Jeff Cantwell from Seaport Global predict it could hit $2 trillion long-term, with $500 billion in the near future. Circle's USDC, with its $62 billion market cap, is a major player. As more businesses and financial institutions adopt stablecoins for payments and settlements, Circle's revenue grows with increased USDC circulation. Driver 3, regulatory tailwinds. Regulatory clarity is a big deal for crypto. In 2025, the U.S. Senate passed a bill establishing a formal regulatory framework for stablecoins. This reduces uncertainty and boosts investor confidence in companies like Circle. Plus, optimism around potential stablecoin-friendly policies under a possible second Trump administration has fueled excitement. Circle's CEO, Jeremy Allaire, is also pushing to integrate USDC into mainstream finance, which aligns with these regulatory shifts. Driver 4. Institutional adoption and partnerships. Circle's strategic partnership with Fiserv is a massive catalyst. Fiserv provides core processing for thousands of banks globally, and this deal aims to integrate stablecoin solutions into their ecosystem. This could open doors to millions of merchants and financial institutions adopting USDC. Institutional demand is growing, and analysts see Circle as a leader in regulated digital finance. These 4 factors: IPO hype, stablecoin growth, regulatory clarity, and institutional partnerships have created a perfect storm for CRCL's rally. But is this surge sustainable, or are there risks lurking? Let's dive into the numbers and market reactions. Let's talk valuation. At its peak of $165.60, Circle's market cap hit nearly $7 billion. Today, it's trading at a valuation of around $56 billion, according to some estimates. That's a 215 times price-to-earnings ratio based on annualized 2025 earnings and 24 times 2025 revenue. Those are monster multiples even for a high-growth fintech. Circle's financials are strong but not without challenges. Revenue grew from $772 million in 2022 to $1.68 billion in 2024, with profits rising to $156 million. Q1 2025 showed $579 million in revenue and $65 million in profit. But growth slowed slightly in 2024, which raises questions about whether Circle can sustain its trajectory. Their revenue depends heavily on the yield from USDC reserves, which was 4.5% in Q4 2024, but dropped as low as 0.14% in Q1 2022 when interest rates were lower. If the Federal Reserve cuts rates, Circle's revenue could take a hit. Another factor is competition. USDC is the second largest stablecoin behind Tether's USDT, which dominates with a $100 billion-plus market cap. If competitors like Tether or new entrants steal market share, Circle's growth could stall. Plus, traditional banks are slow to adopt stablecoins due to concerns like fraud and regulatory hurdles. These risks make the stock's high valuation a point of caution. Market reactions to CRCL have been mixed. On one hand, analysts like Jeff Cantwell at Seaport Global initiated coverage with a buy rating, predicting 25 to 30% annual revenue growth for Circle. He sees stablecoins as a $2 trillion market and Circle as a leader. On the other hand, some investors are cashing out. ARK Invest, for example, sold $51.7 million worth of CRCL shares after holding $373 million, signaling profit-taking after the surge. This split reflects the broader debate. Bulls argue Circle's partnerships and regulatory tailwinds make it a must-own fintech stock. Bears, however, point to the sky-high valuation and risks like interest rate sensitivity and competition. To put it in perspective, Circle's valuation is comparable to established players like Coinbase, but with less diversified revenue streams. So, should you buy CRCL now, or is it too late? Let's weigh the pros and cons. On the pro side, Circle is a leader in the fast-growing stablecoin market, with USDC poised to benefit from global adoption. Their Fiserv partnership and regulatory clarity are huge tailwinds. Analysts see long-term potential, with revenue growth projected at 25 to 30% annually. If stablecoins hit that $2 trillion market cap, Circle could be a massive winner. But here's the con side. At 215 times earnings and 24 times revenue, CRCL is priced for perfection. Any hiccup like lower interest rates, competition, or slower adoption by banks could trigger a pullback. Stablecoins are innovative, but they're not foolproof. Fraud risks and regulatory changes could create headwinds. Plus, with big players like ARK Invest selling, it's a reminder that even bullish investors are locking in gains. How does CRCL stack up against other IPOs? Let's compare it to Coinbase, which went public in 2021. Coinbase also saw a massive first-day pop but faced volatility as crypto markets fluctuated. Unlike Coinbase, which offers a broad crypto exchange, Circle focuses narrowly on stablecoins and payment APIs. This makes Circle less exposed to crypto price swings but more dependent on USDC adoption and interest rates. Other recent fintech IPOs, like Robinhood or SoFi, also saw big initial gains but later faced challenges as growth slowed. CRCL's 465% surge is exceptional, but history shows that post-IPO hype can fade. Investors need to balance Circle's growth potential with the risks of a crowded fintech and crypto space. So, there you have it. Circle's CRCL has surged 465% since its IPO, driven by stablecoin growth, regulatory tailwinds, and institutional partnerships. But with a lofty valuation and risks like competition and interest rate sensitivity, it's not a slam dunk investment. Whether you're bullish or bearish, do your own research and consider your risk tolerance before jumping in. That's all in this video. Thanks for watching, and we'll meet you in the next one.